Welcome to Money Talk. I'm Kim Parlee. Thanks so much for joining us. We have a great show coming up. One of our favorite guests, Phil Davis of PhilStockWorld.com, is here for the entire show, and he's going to give us his trade of the year for 2026. But before that, and before we jump into it, really, as we look into the year ahead, investors are facing a more complicated backdrop. Economic growth is slowing, inflation remains stubborn, and trade tensions are no longer a risk scenario. They are part of U.S. policy. All of this raises an important question. Where can investors still find sustainable returns in this environment? Phil Davis is here to walk us through what he sees as the big themes heading into the new year. Phil, as always, great to have you with us.
Well, thank you, Kim. Happy holidays.
Happy holidays to you, too, although I'm not quite there yet. We're going to make you work a little bit more till you get to your holidays. So let's start with the markets. And I know you've described the environment we are in right now as complicated. What do you see?
Well, I think the markets are sort of waking up to the hangover from a couple of years of just, tremendous, nonstop good news, effectively, or what they considered good news. And, at this point, it's like, especially after the last Fed meeting, nobody's pretending that inflation is going away. The Fed is backed up and said their target is now 3%. That means the easy money is going to be out of this market. Even if the Fed says they're lowering rates, the reality is the bond market doesn't think so. And we're going to enter into like a phase where it's going to just be sort of grinding out for the next year or so. It's going to be expensive, and you can't just buy the index and hope it's going to go up anymore. You've got to find the right companies that are going to survive this.
Part of that, I know, is you talk about that when you talk about grinding out the market, you see a mild recession coming, and so therefore you got to find these companies that are a little more recession-proof.
Yeah, recession's a tough word, but let's say that we're definitely into a light version of stagflation. So in other words, slow economic growth and still have inflation. And that's very dangerous. So you have to stop chasing the market growth, the beta, and you have to start building a fortress that's going to protect you from what's going to happen in the next year or two. GDP is going to be stuck at 2. The Fed just said it. I mean, this is all a lot of information we got last week. The Fed says 2.5% growth, 2.25% growth. It's not a collapse, but it's nothing fun.
And you talk about stagflation light. Tell me a bit more about that, because how do you find those companies that are going to be able to endure that a little longer?
Well, that's a simple strategy, really. You want to look for companies that have quality over quantity. So, in other words, it's not about how a company is doing structurally. It's not about their growth. What it's about is it a company that people want to have? Do they have pricing power? So, in other words, is the demand inelastic? Are they selling you things that you need rather than things that you want? Because people are cutting the things that they want, especially because in a couple of weeks, people are going to get hit with healthcare bills that are going to knock their socks off.
That's not fun. Where do you stand on AI? I mean, there's, some people will say it's a bubble. Others are saying, we're just in the beginning of a decade-long build-out. Where do you find yourself?
Well, we've been examining this carefully because we're heavy into AI, but the reality, and we just wrote a report on this, is that a lot of AI is sort of a fairy tale where everybody expects to become productive and their projects are going to make them better and so on and so forth. But the reality is that's not really happening. You're not seeing those bottom line improvements yet because people don't understand AI well enough to really become productive from it. Just like in the dot-com boom, there was productivity increases, but it was limited to companies that really understood what they were doing with the internet and figured things out. Most companies spent a lot of money on the internet and had no results out of it. In fact, the productivity report, when it comes out, is going to be vitally important to look at. Investment-wise, though, we prefer what they call the picks and shovels approach. So, in other words, we're not gambling on who wins the AI wars, but we're saying everybody needs electricity, everybody needs chips, everybody needs memory, everybody needs security infrastructure. Those are your winning companies because everybody needs those before they can even pretend they're in the AI game.
What's going to be the biggest mistake you think that people make when they're looking at companies going into 2026? Because the reality is, and you've talked about this as well, is that inflation, tariffs, this is no longer transitory. This stuff is here.
Right. Well, the thing that's here that people aren't counting on is debt. Debt is becoming a serious issue. Tariffs are permanent. The rates are staying near 4 and 5%. They're not coming down, and in fact, they've been going up since the Fed made their announcement. So a lot of people are forecasting that companies will have lower debt just because the Fed is lowering rate, but that doesn't mean that people are willing to lend money at those lower rates just because the Fed says so. They don't have as much control as people think they do. They don't have as much control as they think they do over setting rates.
All right, so strong balance sheets, no debt, pricing power. You've gone through the list.
Cash flow.
Cash flow, exactly. So, all right, well, stay with us when we come back. I'm going to bet we're going to talk about some of the interesting equities that Phil is excited about. We'll also get to his trade of the year, and I'm going to bet they tick the boxes of all those criteria he just talked about. So stay with us. We've got Phil for the whole show. And again, coming up, our trade of the year for 2026. But up next, if you look at a few contenders who almost made it to the top, you're watching Money Talk.